You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 28th of November, 2016. Hope you had a fabulous Thanksgiving as we jump into these markets that continue to soar upwards. We have seen a crossover at the end of the week on our weekly chart for the total market, and it is continuing to soar. We have 3 weeks since the election of strong up movement. We have not yet seen a crossover on our derivative oscillator, but the PPO or the MACD, the price percent oscillator, or the moving average convergence divergence indicator, they're both the same. One uses dollars, the other uses percentage. We've started using the percentage oscillator just because it's percentages and easier to compare. And we see a strong crossover going up. 2 super strong weeks. That first week at the end of the election cycle was also an up week, and the crossover just occurred, so we are confirmed. Go ahead on your daily market worksheets and mark that we are in a strong up move on your weekly chart. Now, if we look at our 2-day chart, just to see what's going on, man, booming. We crossed over going up on the 10th. The 2-day candle ended on the 10th. That was Thursday, a week and a half or so ago. That market has continued to just move up. The total market, we have 1, 2, 3, 4, 5, 6, 7, 8. Count them, 8 up candles. So the market continuing to boom. We see that Christmas effect going on. Now remember, things are going to probably get a little darker after the new year, but we are still in strong up moves. Huge derivative oscillator, huge, and lots of continued up movement in the market. Now, let's go on from our 2-day back to our weekly, and just for the record, for this past day, that was on Friday, that just short little time that the market was open, we actually see that we had 0.41%. That is 0.41% for that short period that the market was open on Friday. Now, if we continue to move along, we'll go back to our weekly chart. We'll take a look at the S&P 500 up 0.37% for the day. It looks similar, strong up movement on the weekly chart with the new crossover, and we also have continued strong movement up on the 2-day chart. Go ahead and mark your weekly chart on the S&P 500 on your daily market worksheet going up. 2-day is continuing to move up strongly. Again, lots of strong up candles. Christmas effect is definitely underway. Thanksgiving effect too right now. We'll continue to see how long that goes, but again, strong blasting up movement. If we do take a look at what happened on the 4-hour, we're continuing to watch our 4-hour, continuing to move up. We're not seeing a lot. We're just seeing a lot of sideways movement as far as our PPO goes. Derivative oscillators holding about the same energy that it has been holding since sometime around the afternoon of the 16th. So again, you know, we're seeing some upward movement, but some sideways sliding, also still well above the 2-day trend line, well above the weekly trend line. So we'll continue to keep an eye on the S&P. Again, if we see a backup occur, and that is going in the down direction, and then it crosses back over going up, that could be an entry point, but we haven't seen that happen yet. So let's go back to our weekly chart, and we'll take a look at the Qs. What is the Qs? That is, of course, the NASDAQ 100. It, too, is moving up. It has been moving up over the last week, but again, nothing like the other charts. Still in a confirmed down move. Again, still in a confirmed down move on the weekly chart. Derivative oscillators losing some of its downward momentum, and the PPO appears to be moving up toward the signal line, but no crossover at this point. Now, when we back off that weekly chart, take a look at the daily. We have 1, 2, 3, 4, 5 upward 2-day candles. We had a crossover back on the 22nd of November. And what's also strong about that crossover is it crossed over at the same time the derivative oscillator did. PPO and the derivative oscillator crossed over at the same time. Again, continue to see up movement. We're above the weekly downtrend. We crossed over that back on the 23rd of November, back on Wednesday, and we've continued to see up movement. For the record, again, 0.32% in that last little short market. If we look on the 4-hour chart, we see strong up movement around the 15th, all the way up until about the 22nd of November, and then falling off. And we're waiting for a crossover potentially going down. That would be an official pullback. And then we'll see if indeed the market takes over and if and when the NASDAQ 100 is going to pull that weekly chart up. Now, again, when we have sort of a schizophrenic condition where the weekly charts move in the opposite direction of the 2-day and the 4-hour, that gives us a little bit of trepidation about jumping in the opposite direction, because remember, all things being equal, the market tends to move in the direction of the largest chart, and the largest chart is the weekly chart. So just keep that in mind as we go forward. Now we're going to range back out to our weekly chart. We're going to take a look at gold. Gold is still and has been since the 12th of August in a confirmed down move, and over the last 3 weeks, gold has been rocketing down strongly. Another strong week of down moves on gold. No up movement in the last 2 weeks. Derivative oscillators continuing to gain downward momentum, and we've watched the PPO kink downward and continue down along with the signal line. So gold confirms strong down moves. If we look at the 2-day chart on gold, we see that it crossed over going down back on the 14th of November, has been moving down strongly. We're well below the weekly trend line going down on gold and below the 2-day trend line. If we look intraday on the 4-hour chart, excuse me, we see that the 4-hour chart kinked up back on the 27th in the afternoon and then rotated back over going down on the 23rd. Good jumping in point potentially for that down move. Remember, we don't have to have much of an up move. Once we have that crossover going down, you can jump back into those down moves. So again, those of you who like gold, who like to trade gold, and again, that's practicing, and of course, this would be an inverse trade. If you've not listened to our training on inverse funds, you need to. They're inverse funds in gold, moves in the opposite direction, along with the other charts that we look at, including SPY, the Standard & Poor's 500. SH is one that moves in the opposite direction, and something like QID moves in the opposite direction of the Qs, the NASDAQ 100. Okay, now let's jump into the thing that we do only once a week, and that is we look at what's going on as far as what might have moved the market in the last week and what might be moving in the following week. We're talking news. We always tell you, pay attention to the charts, not the media noise. This is the one time a week that we actually see how particular things affected the markets and what might be affecting over the next week. Well, we can see that the U.S. economy has continued to gather steam following, in particular, the election of Donald Trump to the presidency of the United States. We've had a number of stronger economic data points being released over the course of the past week. These include a number of things that will probably increase the likelihood of a hike in policy rates from the U.S. Federal Reserve at its December meeting. And we continue to see things highlight such as strong durable good orders. They were up almost 5% in October. And we've seen a 9.5-year high in existing home sales, and then another jump in the Manufacturing Purchasers Index. Very, very interesting. We also see things going on in Europe. We see Merkel has decided that she's going to try to stand for chancellor again. Now, this is in the German economy. Remember, what you've got there is you've had so many problems with her liberal immigration policies. It'll be interesting to see how that happens. It would be her 4th term as chancellor. Also, we saw that Fillon is continuing to advance into the 2nd round, where Sarkozy, the conservative presidential primary candidate, came up short. So we'll see how François Fillon does as things move on in France. Again, our indexes, as we just told you, we have seen all of our indexes from the S&P 500 to the Dow Jones to the NASDAQ and the Russell 2000 all set record highs. And again, the last time we saw this was in 1999 on December the 31st. So again, just continue to pay attention to these charts. See if we have any pullbacks and possibilities for good jumping in points. We also see a number of other things happening. The gross domestic product of the UK, bully for them, continues to surge and be strong post-Brexit. Remember how the UK was just going to fall apart if they didn't have the European Union to take care of them? Well, the Brits didn't feel that way, particularly the north of England, and they gave the news in that election that we want out, and England is continuing to move forward strongly. Also, President-elect Donald Trump had announced his priorities this last week, and one of the big ones was to withdraw from the TPP, the Trans-Pacific Partnership. We will see how that continues to move forward. Bodes well for U.S. companies, though, and the market likes it. We also see Japan continues to see price declines. The Japanese just continue to struggle and print money, negative interest rates, you name it. It just looks like a disaster. So let's talk about what's coming up now as we sort of end the year. We've got a number of things that are happening. We see on Tuesday, the third quarter preliminary GDP, gross domestic product, is going to be released from the U.S. We see on Wednesday, the Eurozone Consumer Price Index is going to be released. And we see on Thursday, the 1st of December, Global Manufacturing Purchasing Managers Indices are going to be released. And then Friday, we're going to see the November Employment Report from the U.S. Again, any of those things, particularly the U.S. GDP, those preliminary numbers, that is on Tuesday, and employment in the U.S. on Wednesday. On Friday, if those are super strong, they might cause the market to bound even further upward. If not, they may cause a pullback. So watch for those things and see if indeed any of that makes sense for your potential gold trades or your trades in the indexes. So folks, that's where we ended the week. Hope that you had a great holiday, that you're motivated for continuing to practice. Again, remember, we're not a stock calling service. We are an education firm, and we want you to practice with us every day. We only ask 10 minutes. We are a little bit longer on our weekly review and forecast, but be with us 10 minutes every day the market's open for us to cover what happened, where our 4 charts are that we follow. That is the total market, the S&P 500, the NASDAQ 100, and gold. And we'll always try to be here for you. If you appreciate what we do, we'll go to iTunes and subscribe to our podcast. You guys have made us as high as number 6 in the world for Stock Market Podcast, and we very, very much appreciate that. Give us a 5-star rating, say something nice about us. Also, go to our YouTube channel. It's one of the first places we upload all of our new training, all of our daily reviews and our weekly reviews. And go to our website. Sign up for and receive daily our podcast that we email right to you. And when you sign up there, guess what else you get? You get our daily market worksheet that we ask you to fill out every day. If you want to supercharge your training and learning how to read these stock charts, that's the number one thing to do. As you listen to us for 10 minutes every day, fill that daily market worksheet out. It will help you no end. Also, you'll receive our How to Read a Stock Chart video. You'll get a link to that, and that is 15 minutes of need-to-know information to figure out how and why we do the things that we do. And you'll also get the layout that we use at freestockcharts.com. And again, the operative word there is free, freestockcharts.com. And we just appreciate you. Again, hope you had a great holiday. We're happy to see this market start back again as we head toward the end of the year. God bless. Let us hear from you at chartingwealth.com.